Mayuresh Joshi is joining in for the last leg of the market. The Nifty is holding on to 25,100. So we have seen some follow-on rally, but we've not managed to hold on to the day's high, which was 25,160. Mid and small caps, though, are doing exceedingly well with a rally of more than 1% and a strong advanced decline ratio to start the week with. Mayuresh is with us. Mayuresh, the top loser on the Nifty is Eternal. Swiggy is also corrected, and this is following Rapido's entry into the food delivery market. You know, competition rises when there is money to be made, when the pie is large and there is opportunity. But, you know, anyway, they were facing competition in quick commerce, and now you've got competition even in food delivery, and any new player always adopts the discounting route. How do you see this place evolve?
Afternoon, Ruma. No, I think absolutely logical. So I think any new entrant which is expected to come in will use discounting as a tactic to probably ensure that he starts garnering some element of market share. And therefore, I think the kind of strategy that Rapido has adopted is not a surprise, because they do want to get some foothold into the quick commerce market. Having said that, I think all the elements that Eternal and Swiggy are going through at this juncture, both in terms of the accelerated capex that both these companies are undergoing at this juncture to ensure that the dark stores double within the next 3 to 4 quarters. And the strategy that has been well defined. Earlier, I think the expectation was that this should expand over 2 years. They do want to expand this over 1 year, because they do sense that competition is brewing up. And it's not just from Rapido. I think you've got players like a JioMart as an example, who are also running pilots. You've got players like an Amazon, who are running pilots as well. And also select niche players, e-commerce players, who are probably trying to establish some element of platforms of their own as far as the delivery systems are concerned. Having said that, I think the expectations in terms of numbers being muted for the next 2 to 3 quarters, to say the least, is something that the street comprehends as we go along. But the bigger picture argument here is what after those 2 or 3 quarters? Do they make a strong comeback with the kind of infrastructure in the dark stores that they would have built across the length and breadth of the country, which gives them the added advantage compared to competitors as well? And that is what I think the markets are probably trying to let sell in, and probably give that element of a risk premium, even if numbers probably come on the softer side. So yeah, I think the price strength has been reasonable for Eternal from lower levels. Swiggy has also seen a decent bounce back. The expectation, as I said, is that post 2 or 3 quarters, they might start regaining the market share because of the dynamics that they're taking.
Okay. Got that. Mayuresh, good to have you on the show. Financials. I mean, the rally simply continues. So let me just ask you for your top picks. I mean, everything's moving higher. Jio Finance, by the way, has been finding increasing traction as well. There have been steady gains throughout the last 2-3 weeks. What's your, let's just get your top 3 or 4 financial picks in this environment.
Absolutely, Surabhi. So I think if I need to break down financials between banks, the private sector banks, the public sector banks, and the NBFCs, within private sector banks, our top pick still remains ICICI Bank. Our own sense is that the expectations that one really builds in and pencils in terms of strong advances for the franchise itself, I think that should continue very, very strongly. Obviously, I think the credit underwriting is something to be watched out for. Liquidity is going to be abundant in the system, and therefore I think the expectation in terms of asset quality pressures building up onto the balance sheet is something to watch out for as well. However, in our opinion, I think ICICI Bank should probably pass through most of these litmus tests, whether it comes to advances growth, reasonable amount of deposit accumulation as well. Asset deterioration largely behind us. NIM should be stable. Provisioning is strong, and the capital adequacy remains strong. And therefore, I think the risk-weighted assets, including expectations of stronger return ratios, should probably persist for ICICI Bank. The big sector universe, leaving aside State Bank from the larger names, our sense is that Bank of Baroda, Bank of Maharashtra, both can be kept on your radar. And again, I think the similar arguments put forth for ICICI Bank. The only 2 additional aspects that come through are the expectations in terms of stronger treasury incomes actually also getting played out on PSU balance sheets as we speak. And the write-offs. I think as there is a stronger recovery in terms of the write-offs that have probably happened, a lot of PSU banks have adhered to this fact. I think these 2 become additional points in terms of how earnings might actually stack up, and therefore significant improvement in ROEs specifically as we see. So Bank of Baroda and Bank of Maharashtra is something that that we've got on the global watch lists as well. Within the NBFC, I think Shriram Finance is something that we continue holding on our local and global portfolios. Our sense is that the kind of diversification that Shriram Finance has, both in terms of its advance book, the expectations of its borrowing mix, the expectations of an interest rate cut, which has largely happened, a 25 bips cut expected to happen, will give it a diversified sense in terms of ensuring that the NIMs and spreads are probably well maintained as we head into the next few quarters. And obviously, I think from a book perspective, if you look at the unsecured stroke gold loan stroke personal loan portfolio, that's capped at 4.5%, which gives them the additional advantage in terms of asset quality pressures not deteriorating in an environment where advances are going to probably be something that the street probably watches out for, specifically when it comes to the NBFC universe. So I think these 3-4 stocks are something that we continue holding in our global and local.
Okay, all right. Hi, Mayuresh. Good afternoon. Good to see you in Aditya Birla Real Estate. The stock is up close to 4%. They've secured some investments in a couple of their projects. And I think MK was one brokerage I recall that was quite positive on the stock. I recall it correcting on very low volumes in the markets, went into a bit of a tizzy. But it's bounced back in style. If I pull up the last 15-day chart, I think the stock is up 15%. What's your view on this name?
So I think generally, Nigel, afternoon to you as well. I think generally for the real estate space, I think we need to be a little bit more selective at this juncture. Obviously, I think the land bank that they possess is significant. And therefore, I think the entire onus in terms of the real estate sector as a whole is going to be how are they going to monetize all the projects that they're probably doing? How is the pre-sales velocity expected to take place? And therefore, what is the cash flows that probably come through over the next 3 to 4 quarters? Having said that, I think what we really kept on our watch list is Prestige Estates at this juncture, because they've got the right mix in terms of residential, commercial, as well as the retail portfolio. The expectation in terms of what the management probably believes, the projects that are ongoing at this juncture are significant as we speak, almost 115 million square feet of development. Ongoing projects or the upcoming projects might be 88 million square feet of development that will come through. They've got a good mix as far as residential is concerned. And in fact, their Mumbai property launch that they've probably done, Nautilus, has actually exceeded pre-sales velocity. And therefore, I think key markets, including Bangalore, Mumbai, Hyderabad, expected to do well. On the commercial stroke annuity part of the business, expectations in terms of fit outs and renegotiations are expected to happen at a significant scale as we head into the next few quarters. And on the retail side as well, I think significant additions that are expected. On the cash flow argument that I was just saying, I think if you look at the upcoming and the ongoing projects that are expected to come through, they've got massive cash flows that can probably come through over the next few quarters. So I think out of the real estate outside, again, DLF and Godrej, I think Prestige is something that we've kept on.
Okay, so Prestige on your radar on the buy side as well. Got that, Mayuresh. Just stay on. We'll have more questions for you in just a bit, but we're looking at a story that's coming in from our Delhi colleagues now.
Mayuresh, have you been recommending any railway stock to your clients, or has it been an avoid?
No, not really, Rima. And again, I think the argument, as you rightly pointed out, is that there is no consistency in terms of earnings growth that is probably coming through. And it's remaining very, very patchy over the last few quarters. Again, I think the expectations in terms of government spending when it comes to railway infrastructure, and again, I think a very composite and a holistic picture of that, whether it's railway lines, creating infrastructure developments at railway stations, anti-collision system, metro coaches, etc. I think that's not still reflecting in consistency that one really looks at in terms of price performance and earnings performance. And therefore, I think a few of the stocks do have momentum tailwinds behind them. Stocks like RailTel, RVNL. Something that we like to keep on our radar and watch out in terms of quarterly numbers will be Tex Macro Rail. We might think this is one interesting story, in our opinion, where there has been a stark turnaround a couple of years back, but whether they're able to probably achieve much more and deliver much more is something to be seen. So I think we're just keeping on our radar to have an earnings perspective taken.
Okay, got that. Mayuresh, by the way, we were discussing this move in the burger stock today, Burger Mania going on Westlife. I'm not sure if you heard anything new in the market, or if it's just some excitement, because we know that QSR stocks have not done much. There have been small bursts of activity, but they've been kind of off the radar for a long time. Any interest here?
Not now. I think we'll wait for definite signs, Surbi, for some earnings pickup to show up. And we don't mind if we lose a 5 or even a 10% move in these stocks. But unless we get complete clarity that there is some element of definite turnaround in terms of consumption patterns coming back, which probably seems to be a base case scenario with tax cuts, with better monsoons, the asset-light model that most of these franchisees are adopting in tier 2, tier 3 cities. I think then it probably makes a base case that earnings might start improving a few quarters down the line. But as of now, I think, again, the earnings still remain very, very patchy and subdued as we speak.
Yeah, all right. Mayuresh, what about asset management companies? What do you prefer out there? HDFC AMC, that suddenly spiked up. You had Nippon AMC. In the last few months, it's steadily been moving up. And the markets were in a tizzy. It corrected sharply, but it's pulled back in style. If you pull up a last 3-month chart, what do you like from this space?
Nigel, HDFC AMC is something that we kept on our radar, and therefore I think we continue holding this in our global portfolios. Our sense is that it's got an appropriate mix as far as the equity and the debt AUM is concerned. A large portion in terms of the issues that the asset management industry was going through, both in terms of fees and some element of regulatory concerns, are largely behind us. And therefore, with the expectations of tailwinds for market penetration, with the expectations of more investors coming in over the next few years, I think the kind of operating leverage that asset management companies can probably derive can be quite substantial. So I think within the AMC pack, I think HDFC AMC remains part of it.
Mayuresh, we spoke about Shriram Finance and how that is one of the picks that you have in the broader financial market. But what about something like Bandhan Bank, which, Sudarshan was talking about with the regulatory burden easing? UBS is highlighting some other beneficiaries like Chola, M&M Financial, even a PFC REC or an AU Small Finance Bank. Any of these make it to your buy list?
Afternoon, Rima, again. No, I think outside the names that I mentioned, I think Karur Vysya Bank is something that we continue holding on to our portfolios. Our take is that the kind of loan growth and the diversification Karur has, specifically in terms of the exposure towards the commercial and the corporate segment, where they've got very, very tight underwriting risk parameters put in place, which is getting reflected by superior asset quality that they're probably reporting. I think with interest rate cuts assumed and the transmission expected to happen, a lot of stress on the corporate stroke commercial part of the business will start going down. And therefore, I think banks with exposure toward these segments, where Karur already has a very, very strong underwriting profile, might start improving significantly in the next few quarters. So I think one of the names outside the larger ones, Karur, is something that we continue remaining positive.
Mayuresh, let me ask you, IEX, MCX, how do you find these two exchanges?
So I think MCX looks a tad bit more interesting. I'll tell you why. I think the kind of ADTVs, the average daily turnover, which had been lagging over the last few quarters, are expected to make a comeback with the expectations of the electricity futures actually starting to make a huge impact in terms of the overall ADTV volumes. The second aspect in terms of gold prices being higher, I think the overall mix in terms of crude at 58% for FY25, natural gas at 17, and bullion at 25%. I think that was the mix that largely ensured that the overall EBITDA compression that had happened because of elevated employee stroke technical costs largely remained range bound. Having said that, I think the expectations with new contracts, the expectations that at some point of time, maybe silver as an optionality in terms of silver options available on the exchange as well, might also start propping up volumes. Around 2,700 crores of cash onto the balance sheet, which is 7% of the market cap. OCF to EBITDA is around 115 odd percent. ROE is 34%. So I think the dynamics from a balance sheet perspective are there. It just needs these triggers to ensure that all the aspects that the street is probably looking at are probably kind of through. So I think the momentum might very well continue for MCX.